So today we're going to look at what are Bollinger Bands, what is their significance, and how you can use them in your price action trading in Forex. Hey guys, welcome back to another video, and today in this video we're going to talk about Bollinger Bands. Okay, we're going to go through everything related to Bollinger Bands. So first of all, we're going to see what are Bollinger Bands, how they're formed, and what is their significance. Okay. And after that, we're going to go through a basic strategy of what Bollinger Bands are used for in Forex trading. And in the end, I'm going to reveal or show you a very advanced and very useful trading strategy in which we use the Bollinger Bands to make some good profits. So before starting, please make sure to subscribe to our channel so that you'll be the first one to know whenever we upload new content. So first of all, let's go through what are Bollinger Bands. In order to access the Bollinger Band indicator, what we need to do is we need to go towards the indicators and type in Bollinger Bands. Okay, so we can see this is a built-in indicator and we can just click on it and we're gonna see three lines here. Okay, so after the formation of these three lines, we need to understand how these three lines are forming. The primary line or the middle one is basically the source of this indicator. This is a simple moving average line. Okay, if you are not familiar with the simple moving average line, then what it does is basically simple moving average. Let's say if you are considering the last 9 candles, so what it does is it takes the source. In this case, let's say the source is close, so it would take the close of last 9 candles and add them up and divide it by 9. Okay, so that would give us the simple moving average for the next candle. So this is how simple moving average works, and these two lines are basically the standard deviation. Okay, and now let me just show you the settings of the Bollinger Band indicator so that you can understand it, how to use it on your charts. So in order to access the setting, we can just go here and click on this setting icon. Here we see that it's asking us for the length of our simple moving average. So ideally what we do is we use the length of 21. Okay, and we're gonna keep the close as a source, and here we can see that it's asking us for standard deviation. Now standard deviation is taking the simple moving average as a source and it is forming these two lines, the upper line and the lower line. Okay, so here we're gonna just set it to 2. Okay, because this is the optimum value. So after that, we can go into the style, and in the style, what I'm gonna do is I'm gonna color the upper band as red and I'm gonna make the width as 3. Okay, and then I'm gonna make the lower band as green and I'm gonna make the width as 3 as well, and I'm gonna just turn this middle band as blue. Okay, so here I have shown you the settings of the Bollinger Band indicator, and now we're gonna go through what it means and what is its significance. After applying the Bollinger Bands indicator and giving it the values or the inputs that we want, it's gonna plot 3 lines. Okay, as I explained earlier, that this lower line is basically our lower band. Okay, so I'm gonna just call it as lower band, and this above line is basically our upper band, so I'm gonna just call it as upper band, and let me just name it upper band, and this middle line is basically our middle band, which is basically a simple moving average line. So let me just go here and middle band. So we now know that this middle line is simple moving average line, and the other 2 lines are the standard deviation of this simple moving average. Okay, so now these upper and lower bands act as dynamic support and resistance. Okay, so let's go through the significance of the Bollinger Bands lines. Okay, so here what they do is basically they represent the volatility in the market. Okay, they help us see the markets clearly, because what they'll do is they will help us identify if the market is currently moving in a range, okay, or is it trending, because the more the volatility, the more strong is the trend. Okay, so if the bands are moving sideways, as we can see here, in order to detect if the market is ranging or trending, what we need to do is we need to look at the distance between the lower band and the upper band. Okay, if the distance is smaller and the inclination is not big, okay, and it's moving sideways as we can see here in the horizontal direction, then it means that the market is currently ranging, as we can see here and as we can see here as well. Okay, so this is the ranging market. When we see the lines going apart, when we see the lower band and upper band going apart and the distance is increasing, that means that now the volatility is increasing and the market is trending. And another thing it does is it lets us know about the strength of the trend. The farther apart they are, the more stronger the trend is. Okay, so we can see that there's a huge gap here because there's a formation of this impulsive bullish candle. Okay, and after that the market became ranging and these two bands also came closer to each other. So in a simple strategy, what we do is we call these upper and lower band as dynamic resistance and dynamic support. What we're gonna do is, when the price touches this upper band, we say that the market is overbought. Okay, and when the price touches this lower band, we basically call it as the market is oversold. So this is the difference. This is what we need to know in order to trade using this Bollinger Band strategy. Okay, now the simplest strategy, as I just explained, is just to place a short position or take the sell trade when the price touches this resistance, because when this line, this upper band, is acting as a dynamic resistance, the price is going to touch it and come back. So what we can do is, in a simple strategy, we can take the sell trade here, and when the price crosses this moving arrow line, we can take profit here. Okay, and after that we can also do the buy or get the buy trade, place the buy trade when the price touches this lower support. Okay, because after the support the market is gonna go up, as we can see here. So this is the simplest Bollinger Band strategy. Okay, now as I said in the beginning, I'm gonna show you an advanced strategy, an advanced price action strategy, through which you can be more profitable and take more risk to reward ratio. So in order to do that, what we need to do is we need to follow 3 simple rules. Okay, the first rule is that the market, we need to look at the overall trend in the market. So in order to look at the overall trend, we need to zoom out, and here we can see that there's formation of this higher high, and this is basically our low. Okay, so this is our high and this is our low. So after the formation of this high and this low, there's continuous formation of these lower lows and lower highs. So what this means is currently the bearish trend is prevailing in the market. So this is our first thing. Okay, this is the first step of using the Bollinger Bands price action trading strategy in Forex. Okay, the second step is to take the trade in the direction of the trend. So if the trend is in the bearish direction, we want to take the sell trades. Okay, we want to take the short positions because we don't want to go against the trend. As I have always say that the trend is your friend, so you should always take the trade in the direction of the trend. And if the price or if the trend was bullish, what we would have wanted, as we can see here, that the trend is bullish. So in this case, what we want to do is we want to take the buy trade. We don't want to take the short position in this trend. Okay, because it has higher probability of going against us. So the first step is look at the trend. Okay, analyze the trend by zooming out, and the second step is trade in the direction of trend. Okay, and the third step is that you should look for the candlestick patterns near the resistance, because if we want to take the sell trades, what we want to do is we want to add the confluence to simple strategy for Bollinger Bands. As I explained earlier, the simple strategy is to take the trade when the price touches the upper band. We should take the sell trade, and when price touches this lower band, we should take the buy trade. But in order to add a confluence, what we need to do is we need to look for candlestick pattern that is indicating that a bearish trend is gonna happen, okay, or the price is gonna go towards bearish direction. So we need to look for the candlestick pattern near the upper band, okay. And let me just go here to see if we can find some candlestick pattern. Okay, so we can see here that there is formation of this inside bar, and after the inside bar we can see this impulsive candle, okay, and which is in the bearish direction. Here what we want to do is, first, this is like, if you're just following a simple strategy, this is touching the upper band. So, and also as a confluence, this is also forming an inside bar. So what we want to do is we want to take the sell trade here, and we will put our stop loss just above this inside bar candle, okay. Our first take profit will be at when the candle crosses this simple moving average line. So our first take profit will be at this, okay. And in order to increase the risk reward ratio, what we want to do is we want to place another take profit when the candle crosses the simple moving average in the upward direction. So it basically happened here. So this trade is good, but for only with the small risk to reward ratio, okay. So let me look for another trade so that I can show you clearly. So let me just go here. Okay, so here we can see the formation of this engulfing candle, and this is basically a bearish engulfing candle, okay. So first, the price is touching this upper band, and second, there is a formation of this bearish engulfing candle. So all of our conditions, three conditions in which we need to see the direction of trend, we need to trade in the direction of trend, and we need to look for a candlestick pattern, all these three conditions are being met here, okay. So what we want to do is we want to take the sell trade, and we want to put our stop loss at just above our bearish engulfing candle, and our first take profit would be at this level, okay. And our second take profit would be when the bullish candle or bearish candle crosses this simple moving average in the upward direction, okay. So when, or for the second time, so here we can see that this simple moving average, the candle crossed it here for the first time where our first take profit is, and then it crossed the simple moving average second time at this position. So this would be our second take profit. So our first trade would be closed here, and our second trade would be closed here. So what this does is it allows us to get higher risk to reward ratio, okay. And the opportunity of making like small risk to reward ratio trades is very frequent in Bollinger Bands, because we can see here the formation of the candle touching here, okay. Let me see. So here we can see the formation of this pin bar, and the price is touching it this here, and we can take a short position here and put our take profit at this simple moving average line, okay. And in a similar manner, we can see the opportunity again and again, okay. The difference between this simple one and the strategy that I just explained, which involves the 3 steps, is that this one allows us to get higher risk to reward ratio, okay. However, if we want to take smaller risk to reward ratio, or if we are okay with the smaller risk to reward ratio, then we can take like whenever we can buy when the price touches this lower band, and sell when the price touches this upper band. But this simple strategy has less percentage of winning, and it has less percentage chances of making you some money. So that's why I would always recommend you to go with the advanced price action trading strategy whenever you're trading in Forex using Bollinger Bands, okay, that I just explained. So let me just explain what we have done in this video so far. So first of all, we explained what are Bollinger Bands and how these 3 lines are formed, okay. The middle one is simple moving average, and the upper and lower band are basically a standard deviation of this simple moving average. Then we discussed about what is the significance of the Bollinger Bands channels. The significance is that when they basically show us the volatility. So when they are moving close to each other and moving in the like not very inclined and moving in the same direction here, then that means that market is ranging. But when they're moving apart and the distance between the upper and lower band is increasing, that means that the volatility is high and the market is trending. Okay, and this upper band is considered as a dynamic resistance, and this lower band is considered as a dynamic support. The one thing that I need to make clear is why we took this standard deviation as 2. Okay, so the reason behind that is about 95% of the price action happens within this range. Okay, happens with the standard deviation of 2. If we just increase it, let's say if we make it 4, what is gonna happen is the lines are gonna move further apart. Okay, so as we'll just see, so you see like the lines have moved further apart from each other. So now you can see that the candles are barely touching the upper and lower band, which is not good, because we want to take the trades that have possibility of making us some money. So that's why we always use the optimum standard deviation, which is 2. Okay, and then we follow the strategy that I have just explained. So I hope you like this video. If you have any questions, please comment down below. Also, don't forget to join our free Telegram channel, in which we post educational content time to time, and we keep you updated about our strategies and price action trading knowledge in Forex. Also, you can visit our website www.forexbee.co in order to learn more about Forex and price action. See you guys in the next video. Thank you.